Thank you for joining us on Business Morning. Welcome, I'm Esther Ugmudaga. It was a mixed bag yesterday of drama, frayed nerves, and quite an informative session at the House of Reps public hearing on the state of the capital market, which commenced proceedings yesterday. And at the Central Bank, Deputy Governor Financial System Stability, Mr. Kingsley Moalu, the Managing Director of the Nigeria Deposit Insurance Corporation, Mr. Umaru Ibrahim, and the Managing Director of the Asset Management Corporation of Nigeria, Mr. Mustafa Chikeobi, all took turns to make presentations and answered questions from members of the committee. Now, in his presentation, the CBN Deputy Governor admitted that perhaps if the regulators of the financial services sector had taken their oversight functions more seriously, it may have averted the banking crisis of 2009. Now, for the NDIC and AMCON boss convincing the committee that the process of the nationalization of 3 commercial banks was necessary and done in a transparent manner, it turned out to be a Herculean task for both of them. Now, of course, Channels Television captured the entire event yesterday, and just let's listen to what went down yesterday. This week's session kicks off on a dramatic note as the CBN Deputy Governor, Financial System Stability, Kingsley Moalu, expecting to answer questions based on his presentation. Mr. Moalu is taken aback by the line of questioning that follows and quickly brings this to the attention of the committee.
In Bank PHB, the non-performing loans in Bank PHB were 40.86% of the total loans of Bank PHB, totally non-performing. Oceanic Bank, 44.35%, non-performing. AfriBank, 47.0%, non-performing. This is, by any definition, a massive systemic crisis that called for systemic intervention, called for the lender of last resort function. And if that lender of last resort function had not been exercised, I put it to you very clearly, without any shadow of doubt, the financial system in this country would have collapsed.
Does the CBN do business on behalf of the federal government?
The CBN does banking business for the federal government and on behalf of the federal government.
And in the course of doing this type of business, you do not generate revenue at all?
My understanding is that the purpose of this exercise is to discuss the capital markets. It seems to me, with all due respect, that a number of the questions are going into other areas that were not in the invitation we received. So I'd like to just seek clarification and to seek reaffirmation that we're here to discuss the capital markets.
The next 3 hours saw the Deputy Governor being drilled by members on various issues, with particular focus on the activities of the CBN and AMCON on the nationalization of 3 commercial banks. With the atmosphere now tense from the question and answer session, members dismiss the CBN Deputy Governor and take on the Managing Director of the Nigerian Deposit Insurance Corporation.
I want you to advert your mind to AMCON and its ownership, and say whether or not it has been nationalized. Section 2 of AMCON Act 2010 provides, subsection 1, the authorized capital of the corporation shall be 10 billion naira, which shall be fully subscribed to by the federal government and held in trust by Central Bank of Nigeria and Ministry of Finance Incorporated in equal proportion of 50% each. No other Nigerian owns or participates in AMCON or in the so-called banks. Have we not nationalized those banks?
Mr. I have no problem in recognizing the fact that yes, you can call these banks as nationalized banks. The problem I have, sir, is that you have to agree or appreciate the context in which this was done.
With more focus now on the nationalization of the 3 commercial banks, members couldn't wait to usher in the Managing Director of AMCON.
I assumed that the committee in its wisdom was inviting me here to speak as an expert on capital market matters. And I have listened to the hearings all day today, and I must say I find myself surprised at the focus of the hearing.
The managing director of AMCON. Just seconds into his presentation, Mr. Chike Obi sends tempers flaring.
This is not a knee-jerk thing. You can't just stroll in and then feel that you can just talk to us and walk away like that. And on behalf of Chairman, I believe that we would demand a presentation from you in formal form.
As nerves calm down, he's given the chance to comment on the role of AMCON while members dig deeper on the issue of the nationalized banks.
In Nigeria, the 8 banks that we had represented close to 30% of banking assets. It was such a big problem. It was not susceptible to all the fixes we've heard discussed here. NDIC doesn't have the capital to assume these banks and manage them. The amount of money we put in Bank PHB, which became Keystone Bank, was about 300 billion naira. NDIC could not capitalize Bank PHB, and the only alternative was to liquidate Bank PHB. If I just pick Bank PHB, if that bank had been liquidated, it had about 500 billion in deposits. Of those deposits, about 300 billion were public sector deposits. That means that public institutions in Nigeria would have lost 300 billion naira.
With several hours now spent on the session, more people, including the Access Bank managing director and a representative of a shareholder group, giving their thoughts on factors that led to the capital market crisis. Although the newly constituted committee promised a drama-free hearing, Wednesday's proceedings were far from it, and analysts say it may be a sign of more to come. However, as proceedings continue, they hope the committee will not lose focus of its mandate, which is to identify the factors that led to the near collapse of the capital market and ultimately increase investors' confidence in the market. Those were some parts of the hearing yesterday with presentations made by the CBN Deputy Governor Financial System Stability, Mr. Kingsley Moalu, the NDIC boss, Mr. Umaru Ibrahim, and the Managing Director of the Asset Management Corporation of Nigeria, Mr. Mustafa Chike Obi. Well, Stay with Channels Television will continue to track the proceedings of the House of Reps ad hoc committee that's investigating the near collapse of the capital market. Away from that, now let's go over now to the world market to see how stocks are shaping up in early trade. We're seeing mixed numbers across the board, particularly from the Asian markets. We saw numbers slumping this morning after disappointing data from both sides of the Atlantic put investors on the edge once again. Well, let's take a look at the numbers now. Leading mixed numbers this morning is the Nikkei 225 in Tokyo, Japan, which went up about 0.31% and closed at 9,380.25 points. The Hang Seng Index in Hong Kong slipped 0.26% down to 21,253 points. The Shanghai Composite Index in China up 0.07%, while the ASX 200 in Australia slipped into negative territory, down 0.16%. So we're seeing an evenly spread, a mixed bag there for the numbers from the Nikkei in Tokyo down to the ASX 200 in Australia. The MSCI Asia Pacific Index, which measures markets across Asia, lost about 0.2% this morning. Investors in Asia will be keeping their eyes on Europe today. Later today, the European Central Bank will meet later today to decide on interest rates. And once again, analysts say they expect the bank to keep interest rates unchanged at current levels. Well, let's cross over to Europe now. It looks like Europe is trading in the green in just 2 hours of today's session. The London FTSE 100 leading other gauges to the upside, up over 0.6% at 5,794.36 points. The Zeta DAX in Frankfurt, Germany, also rallying over 1% this morning. The Paris CAC 40 in France also in positive territory, a little over 1% in gains so far, while the Zurich Swiss Market Index also in positive territory, over 0.5% at 6,146.84 points. Investors were encouraged by positive earnings from French bank Société Générale, which beat analyst estimates for its Q1. That's first quarter results for this year. Also, a planned bond sale by Spain later today, is also helping to lift sentiment. Well, that's left to be seen because Spain hasn't particularly had a successful outing at the bond market in the last couple of weeks, and we'll have to see how that plays out in the course of the day. Well, Europe still has about a couple of hours of trade ahead today, and of course all eyes will be on the ECB meeting later today. Well, let's cross over to the other side of the Atlantic. Wall Street numbers from Wednesday. The Dow Jones Industrial Average still very strong at over 13,000 points. However, it slipped yesterday, down 0.08% to 13,268.57 points. Now, among the key S&P sectors, we saw energy stocks leading the laggards. That's those stocks that made it to the negative or the losers table, while consumer discretionary stocks closed higher. The gauge gave up about 0.51% or 0.25% to finish at 1,402.31 points, but still held above the 1,400 milestone. The Nasdaq for the technology stocks rose about 9.41 points or 0.31% to end at 3,059.85 points. The CBOE Volatility Index, widely considered the best gauge of fear in the market, closed near 17. We saw stocks slumping at the open of the trading session following news that employers in the private sector added just about 119,000 jobs in the month of April. That's according to the ADP report, well below analyst expectations of about 170,000 jobs. And the markets have been closely watching and monitoring the jobs report and had been expecting a positive data, but that dampened sentiment when the numbers came in bearish. Well, adding to market pressure was the factory orders also, which fell about 1.5% in the month of March, logging their biggest drop in 3 years. So all of that combination of a cocktail of bad news dampened sentiment yesterday at the American markets. The Russell 2000, gauging the smaller cap stocks on the bourse, stayed afloat, up at 0.33% at 818.60 points. Away from the global markets, let's come down to our own markets. The markets resumed from the May Day holiday. We saw the composite index going back into winning ways, this time up 1.39% and still firmly above the 22,000 point mark. The NSE 30, tracking the performance of the bellwethers on the bourse, also rallied up 1.08%. We saw bank stocks and some blue chips leading gains. Also, robust first quarter earnings from First Bank also lifted sentiments. We saw the banking index being the best performer yesterday, up 4.15%. The insurance subsector, however, slipped into negative territory, down 0.45%. Food and beverages was up over 1%, while the oil and gas index slipped down 1.03%. Now, today we're looking at gas production in Nigeria. According to the Nigerian National Petroleum Corporation, that's the NNPC, demand for natural gas in Nigeria is expected to hit 5.5 trillion standard cubic feet per day in 2016. Of this amount, the power sector is expected to consume about 4 trillion. That's about 72.7% of the aggregate gas demand. But sometime last week during the South-South Economic Summit in Asaba, the Delta State capital, the Minister of Power, Professor Bathinaji, said that over the years there hasn't been enough investment in gas production and gas infrastructure. But those are some of the issues we'll be looking at today. Joining me after the break is Galtiman Liman. He's an energy expert and policy analyst. We'll be looking at this issue together. We'll be right back in a moment. Welcome back to Business Morning. Today we're looking at gas production in Nigeria. Now, a few days ago, sometime last week, Nigeria's Minister of Power, Professor Bathinaji, said that as a result of inadequate gas production in Nigeria, Nigeria is unable to power its power plants to provide more electricity. And he did say that there are actually more plants coming. He said that the Ministry of Petroleum has actually declared a gas emergency for about 12 months. Well, joining me now is Galtiman Liman. He's a policy analyst and energy expert. That's what we're looking at today. But before I bring him in, let's quickly listen to a track from the Minister of Power, Professor Bathinaji, who was speaking at the just concluded South-South Economic Summit that held last week in Asaba, the Delta State capital.
There are a number of things that are dependent. Gas, for example. The Ministry of Power does not generate one molecule of gas. Okay? So people may think that we are responsible for that, but we are not. Okay, so you have gas that we have to use to power our power stations. Over the years, there had not been investment in gas production and gas infrastructure. It's coming to bite now. So if I now tell you that we have so many power plants that are now ready to generate electricity today for Nigerians, but because of inadequate gas, we are not able to power them. And more are coming. This president has done everything to fast track the provision of power. So I can assure you that he has also focused on provision of gas. In fact, 2 days ago, we held a meeting. The Ministry of Petroleum, you might have heard, has declared a gas emergency. It's all geared towards solving this problem. So, and it's a gas emergency for 12 months. So that within these 12 months, everything will be done to ensure that we have a gas solution.
Well, the Minister of Power there, Professor Bathinaji, speaking on Nigeria's gas supply at the just concluded South-South Economic Summit that held last week in Asaba, the Delta State capital. Well, joining me now is Galtiman Liman, a policy analyst and energy expert, and he'll be reacting to some of the comments by Professor Bathinaji. Thank you so much for being here, Galtiman. Now, you heard what Professor Bathinaji said. He said the petroleum industry has actually declared a 12-month emergency in the power sector. Now, what do you make of all that he said?
Well, we need to first of all put this statement by His Honorable Minister in a very clear context. He is talking about infrastructure investment in the power sector that are already on ground without taking into cognizance the requirement for the input, which is the gas. So there is a real strategic policy failure in the first place, because it shows that we've not looked at the gas, the power sector, the investment sector in terms of financings and all these other issues, the social milieu under which this investment takes place in a comprehensive context. And so therefore, this has now, over the years, resulted in the shortage of the gas as input to the power sector. And another issue that we need to put in perspective is the advanced industrialized nations are moving away, as they've moved away from coal production, they're moving away from the dirtier oil production to cleaner gas because of environmental concerns, because of the purity of the energy coming from the gas sector. So gas is critical to power industrial democracies. So if we, as Nigerian nation, don't get our acts together, we're talking about always investing in emergency issues. We don't look at it in a comprehensive manner, the gas, this critical sector. Other investors will liquefy it, move it to where the refining facilities are, whether it's in Massachusetts, whether it's in Milford Haven in the UK. They will get value and move on, leaving us with stories to tell to the Nigerian public. So that's my initial take.
So why is it so difficult for us to get gas to these plants if we have tons of gas? I understand we have about 7.8 billion cubic feet gas wells production per day, and out of this amount, we're even flowing about 15%. So we have all these power plants waiting.
Well, it's all tied down to the overall policy of making sure that you look at your investment profile and see how you can add value, whether it's in the crude oil section, whether it's in the gas section. You're looking at efforts by government in a lackadaisical manner to allow primary products that don't have any values being exported out of the country. And those economies that are very serious, who are also concerned about the development of their society, their people, they would not expect them to give in easily. If you don't put your house in order, if you don't refine, if you don't have refining facilities, if you don't also take care of the local communities, that will now create agitation. And that was what had created agitation in the Niger Delta, that had led to the vandalization of the pipelines. And so once you have these social problems in terms of environmental degradation, in terms of gas flaring, that brings in acid rain, it will invariably lead to social, political, and economic difficulties within that community. The militancy, that was the issue. So that had affected investment because of the neglect over the years as a consequence of the military dictatorship that was not answerable to the needs of the community. So this is now, as the professor is saying, playing itself out. Investment that ought to have taken place 50 years, 30 years ago have not done so. There's a lot of massive corruption in that sector.
But
so
now, sorry to butt in, now,
yes.
okay, obviously the federal government has said several times that it's committed to ensuring that power reforms see the light of day. Investors have been brought in, so much money is being put on the table, as it were. But in the last couple of weeks or even months, there's been a shortage of power supply. So I'm just thinking, we have the experts there, we have those in charge, the authorities involved, and why can't we just come to a place where expertise, knowledge, commitment, political will, we just, put all these things together and then we can move forward?
You see, these projects are long gestation projects. They have huge multi-billion-dollar investments that will attract funds coming from outside. You have to outsource those funds. And investors are very, very shy people. They have options, like I said, to invest in Milford Haven, for instance, or in Louisiana, for instance. They have also options to invest in Sinopec in China. And when they see political stability, they don't see, quote unquote, the issues of Boko Haram in Nigeria and all these other things, the Niger Delta militancy. They will take their funds and move somewhere else. So if right now you're talking about investments in the oil and gas sector, particularly to power your electricity production as gas-based, in contradistinction to hydro powered station or the solar energy, then you are talking about bringing in investors. You need to have a longer term perspective. It's not just about sweet pious statements that, yes, we're declaring emergency. You're talking about bringing in close to, let's say, for a particular project, you're talking within the region of something to 10 to 15 to 20 billion US dollars. Of course, you have investors because of the return on investment like Chevron, Shell, ExxonMobil, and all this other that are ready, that are committed to bring these funds if you can also have the peace and stability. So it's not just making pious statements and say, look, we are declaring emergency. What is the situation on ground? Will there be vandalization of the pipelines? Because when you bring out this gas from a particular section, because it's an associated gas that comes out from the crude oil production, can you easily have a facility that is not going to be attacked? Can you easily pipe it to the to the terminals and then for exports? These are all these other things. That's for the export leg. Now, if you're talking about having power sector, it's a domestic element. That's the downstream element, and the downstream element had over the years had not been well developed as a consequence of the insecurity, because these things, like the research has shown, they're like sitting targets for terrorists. If you have a gas facility, for instance, because of the terrible nature of the commodity, it just gunshot and you lose billions of US dollars worth of investment. So sometimes it's in the best interest of investors to see how we can take it away from the onshore to offshore where you have less destructions. And it's a lot more costlier to the nation because we're moving from where we can easily now get a location advantage to where it is offshore, where you need to have military, Navy protection and all this for those facilities. So this is precisely what had affected the domestic supply of the gas. And in addition to that, because it's in a zero-sum world, because as you don't develop, somebody else is taking advantage of this very vital commodity. The moment you don't put your house in order with this valuable commodity, other industrialized nations that know that you need to fire your V8 engines, you need to fire your aircraft, you need to fire your power sectors, you need to provide gas from the gas will invest more. So that's precisely what is happening here in the country.
Yeah, interesting. Now let's talk about demand. According to statistics or data released by the NNPC sometime last week, they said demand for natural gas in Nigeria is expected to hit about 5.5 trillion standard cubic feet per day. They also say of this amount, the power sector is expected to consume about 4 trillion. And then they also made some projections that about 3 years from now, Nigeria is expected to have attained a robust infrastructural delivery for gas supply. Now, while we haven't, like you said, put our house in order or fix things in the near term, we make all these very ambitious projections, especially for where gas is concerned. But for now, nothing. We have the emergency that's been declared. We had the Minister of Power saying that we don't have enough power to power. We have so many power plants lying there, no gas to supply. Yet we have these robust projections that will have attained this by 4, 5, 10 years from now.
There's absolutely no doubt that there is huge demand, both domestic, industrial, and for exports in terms of the gas, because it's cleaner, it's finer, and it's better than coal, it's better than the environmental degradation that you're seeing.
If it has all these good attributes, aren't the policy makers aware of all the upsides, advantages of this gas, and why isn't there? Yes, it's like you said, it's not enough to just declare an emergency. Why aren't they moving in such a manner that will be visible to see that something is being done?
As far back as 1720, there is one Richard Walpole, who is the Prime Minister of the United Kingdom, at that particular time. It says standing in policy, in the advanced nations to ensure that you add value. You get raw material, primary products from the former colonies. So until a sovereign state realizes that its resource, whether it's cocoa or whether it's coffee or whether it's oil and gas, will invariably be extracted for the benefit of outside economy. And as such, you need to have a political will and say, look, this commodity is absolutely important. It's mine as a sovereign state. I need to add value. If you did that, you would eventually, for crude oil, for instance, where you are earning let's say $20 per barrel, when you can now add value, you are employing people from the Niger Delta, you're adding value to it, and your exports in terms of production of refined jet fuel, the gas itself, you are talking about earning something close to about $1,500 in contradistinction to what you're getting at $120 per barrel. So look at the benefit on the upside. Today, if you go to these countries like India that are not even oil and gas exporting nations, they've done an investment, only 6 point something billion. They're now building the 6th largest refining complex. In 3 years, they were able to build a refining gas petrochemical somewhere in Jamnagar city. How much did they spend? $10 billion. Today, you are talking about Nigeria having about $35 billion in the reserve. So the funds are there. It's a commitment and the political will to say, look, we're no longer going to flare gas. You need to stamp your foot on the ground. We're no longer going to flare gas because it's causing environmental degradation, it's corroding the roofs, it's killing people, the smells there. Some people have not seen daylight in the Niger Delta for the number of 50 years that these gas are being flagged. You can see it in the satellite. So it's a political commitment, a very strong political commitment to say, look, instead of exporting primary products in the oil and gas industry, and that brings us to the issue of the petroleum industry bill. The investment public said, look, you can only do that if you have a bill, a law that is sacrosanct enough to allow free and fair legal platform.
So outside of that, nothing tangible can be done?
That's what that was the argument was. That was the argument. The international oil companies, together with all these other ones that are benefiting from the beauty of getting the ease with which they get just extracting the crude oil and the flaring the gas and then adding value and bringing it back in terms of aviation fuel. I said, look, if Nigeria wants to do a rethink in the oil and gas, you need to have a new petroleum industry bill. And for 8 years, running into this particular administration, there's no discussion on this critical sector, this critical bill that ought to do a complete turnaround of the oil and gas sector.
Well,
so what are you talking about?
Hold your thoughts for us. We need to take a short break at this time. We'll be right back to continue with that particular issue. I've been talking to Galtiman Liman. He's an energy expert and policy analyst, and we have been looking at gas supply and production in Nigeria. We'll take a short break now. We'll be right back. Welcome back. We're still talking gas demand, production and supply. Although Nigeria sits on billions tons of gas reserves, we're still flaring, and that's, according to the NNPC, is still a huge challenge for the country. Galtiman Liman is still here, and that's what we're still looking at. Now, we have about 7.8 billion cubic feet of gas wells production per day. We're still flaring about 15% of that. If we're sitting on billions of gas reserves, why is it? Because this is something that has been said year in, year out. We're flaring, we'll do something about it. Even in the short term, you know, that can be fixed, but still nothing is being done.
Well, it's about the paradox of plenty in the oil and gas, and the geopolitics that plays itself out. I've repeatedly said in a number of occasions that it's a commodity that is highly sought after by the industrialized economies. And it's not like some of these developing countries where without gas you can still rely on firewood or charcoal. Places like New York during wintertime, it's hell. A lot of these industries cannot work without your gas. So if you have, as I said earlier on, a political space that is not cognizant of the importance of this commodity, to the extent that is allowing the communities that are producing this to go through environmental degradation, poverty, and squalor, that will result in militancy, that will also affect the investment profile. You will be sitting on those tons and tons of dump resource without adding value. So most importantly, as I earlier on said, it's the political will to say we have a commodity that will create an El Dorado for this. That will is not a commodity that will be flared, neither is it a commodity that you can burn every day in useless investments without adding value. So that is the critical issue. And if now there is need for you to have legal underpinning, one would have expected the petroleum industry bill to be the most important bill that would have addressed these issues so that everybody will know where investments will come in the gas sector, at what particular stage you will have the flaring, and what kind of penalty that you're going to pay for that kind of wastage, and how you're going to add value. If now international oil companies are coming to extract oil and gas, you said, okay, it's been done in other economies like Saudi Aramco, together with the Exxon and Sonapec in China, have been able to sit down and build these refineries. We're no longer going to export raw gas, neither are you going to flare this thing. Give us a time frame. This research has been shown that you can have a standard working refinery in less than 3 years if you invest about $10 billion.
Well, sorry, Liman,
Yes.
it's 3 years right now because of the our dire need, our infrastructure needs, which of course will take years to solve. But can't we have a shorter term?
You can
plan?
wish. You
A 6 to 12 months. I'm talking about as where gas is concerned in terms of.
You see, you can wish to have long-term gestation projects just off the cuff like that. And this is why over the years, because every politician comes and has this short-term perspective, you said, look, can I have something immediately within this short period of time? People need to know that for you to build a nation, for you to have these long gestation projects, it's a work in progress, that you will have a time frame and you will see commitments that will now last 25 years. Some of these projects will now maybe go 10 years before they can pay back the initial sunk-in capital. So there has to be political stability, there has to be peace and quiet in the environment for these things to work. If that is not taking place, what you will have is advanced industrial economies moving this in raw form and going to places where it is relatively very quiet and peaceful for them to add value and sell expensive products. So at the end of the day, you are sitting down on tons of primary products and buying expensive jet fuel and buying expensive cooking gas, because in addition to the production offshore, you are paying for the shipping, you're paying for the insurance, you're paying for the terminal. So what you have is the landing cost here in Nigeria, it's 4 or 5 times higher than what you earn, which explains to you the reason why we're perpetually a debt nation.
So how can like the Ministry of Power, for instance, we heard the minister saying that we have all these gas plants waiting for gas supply.
Yeah.
What would you have them do? Perhaps
in the first place, they ought not to have even had that those investments, because you know that for you to have those power plants, you need to have the source.
Well, it's not a crime if you have
no.
You own gas, you have billions of gas reserves, and you have power plants. Why not?
We've seen all this investigation that had taken place. A lot of the corruption element has to be brought into this discussion. A lot of these power plants went because people can go and invest them and make their cuts. Precisely that was what happened. Now, real serious investors would have known that for me to have this $1 billion or $2 billion power plant in Osogbo or wherever it is, I need to first have a guarantee that the source of that gas coming from the Niger Delta, for instance, is guaranteed. So it's not that they didn't know. It's easy for you to do your procurements and set up this, and they said, I'm waiting for gas. You understand what I mean? So this is precisely the issue that we are saying, that investment profile has to be done with a nationalistic posture, looking at the long term and looking for at the benefit to both the community and the investors, so that you have a win-win situation. There's no way you can now say, I mean, the supplier of the gas plants will not say, I'm not selling you your gas plants. The construction company will not say, I'm not going to build this construction company. But everybody knows that in Nigeria, eventually when you do that, when the gas doesn't come, it doesn't work. It's just like right now, you know that there's a fuel crisis. I want to give you an example, domestic example. There's a fuel crisis, and for the past 5 years, maybe there's a problem in terms of the sourcing for petrol. And you went ahead to buy an expensive 10 million naira Jeep. It will sit in the house. You can't drive it. Because if the petrol supply is not there, there's no way with all the beauty and all the functionality of for that Jeep to move. The SUV will not move. So it's important that this element is taken into consideration. And the fact that Nigeria has, over the years, not taken this into consideration. We're burning very expensive petrol every blessed day on Okada that just takes one. We don't have mass transit programs that would have conserved this depleting source of energy, that would have added value to export. So all this totality of the mismanagement of the oil and gas sector in particular over the years had now brought this crisis in the power supply. So the only way you can do is to tell Nigerians, say, hang on, we want to get our acts together. For the next 2-3 years, you may not see the kind of light you can have, but with a serious commitment, you begin to see improvements. We need to have honest politicians coming out clearly to tell that to the Nigerians. And it's possible.
According to the NNPC last week, it said that in the short term, that's in 2012, Nigeria is expected to have stabilized existing supply and achieve gas plant potential. Coming from the NNPC, how optimistic are you? NNPC
is not the theater where you can look at the national economy in a perspective, in a wider perspective. They're just the owners of the commodity. What about the political will, which is the key? There are meetings that the presidency does with the international oil companies where the NNPC may not even participate. You understand what I mean? There are security issues that will affect the NNPC investment where NNPC will not be there. So what you've seen in investment, national investment in countries that have moved forward, is to target a particular sector and look at the importance of that sector to the national economy at a strategic level, why you bring in the NNPC, the power sector, the investors, the security, as well, the community leaders, the foreign investors. It's a complete cauldron where you can cook a very nice soup. You have the maggi, you have the fish, you have the fire and all this. That's how productions take place. And you say, okay, now this is what we have in offer. International investors, how much are you going to bring in? Oh, we're bringing in $30 billion US. And you know this one, we sourced it from the World Bank because it's a long gestation program. We sourced it from the private finance, this, and it's very dear to us. And okay, what's the local level of consumption of this project? So you need to have a thorough feasibility study where there is real commitment so that the man who is bringing $30 billion US is not a small amount of money. He will know that in 10 years' time, you have a stable society, you can also have your return on investment. Then they will do the investment. And it's happening in Saudi Arabia where it's it's the biggest oil exporter. And with China, even though politically they don't see eye to eye, China is the biggest importer in the world, the second biggest importer. With the Exxon, which is also another with the technology and all this, they sat down to have a petrochemical plant. Sinopec there in China. Today, everybody is smiling home to the bank, and then you have the electricity production also making the community very happy. So it's a holistic thing, which also requires the peace and quiet, which is quite critical to a national development.
Now, some of the critical sectors that would, of course, are very important in achieving huge potential, economic growth going forward. Like for the year 2020, Nigeria becoming one of the industrialized. I feel funny when I use the word industrialized because when one looks at what's on ground now, you know, it's not too. But going forward, these obviously are very critical sectors that will help us achieve that aim. With what's on ground now and with the current trend, I usually like to be optimistic on
Yeah.
such issues, but from all that you said today and from some of the figures that we have, because most of the time when we look at what the policymakers say, they make projections, and not to say that they're not doing anything, but perhaps not at the pace that everyone would wish them to do. But going forward, are you optimistic that all the key drivers we need, if we're going to be one of the top 20 industrialized nations or top economies, we need to have a very vibrant manufacturing sector, an very vibrant industrialized sector. We need the gas that's going to power all these industries, but we don't
Each
have
time
it
when
yet.
Nigeria says, I want to do, on a serious, they do. You know, first of all, whatever thing you want to do, you need to bring in that love for the nation first. You know, for Nigerians to believe in their country and believe in what God has given to them in terms of the facilities. That is key. If that is not there, and that's why in advanced countries, the element of the flag, the patriotism to the nation, is not in doubt. USA, whether it's UK, you know, Mother Britain, you know, so that it's key. Whether or not we have this in Nigeria is what the leaders ought to work on. I cannot see how investors will look at the levels of bombing and the senseless killing that is taking place and say it's a comfortable place for us to bring in $20 billion. So the first important requirement for any investment to take place is the love for the nation and peace and quiet and security. In USA, you kill one US citizen. You see Barack Obama come in and say, that boy looks like me. We need to take every single step to bring in justice. You saw what happened in Oslo, because the human soul is sacrosanct. If that human soul is not sacrosanct, investors will say they don't even care about themselves. They're busy bombing themselves. How are we going to invest in oil and gas? So first critical issue is for you to have this love for humanity. If you don't have that, you can have all the oil and gas running into trillions and trillions of standard cubic feet. Nobody's going to go and invest in that place. So that is key. And that is the province of the politicians to do. Now, when they do this, the element of the investor, the prioritization comes in. And power sector, everybody now has no doubt whatsoever it's important, because that baba on the street needs it. So you know that it's important. And so the gas is important because it can only become important if you can add value to it, if you can refine it. And it's not expensive to refine. It's not a rocket science. We have some of these rudimentary refineries that are there out there in the Niger Delta that are being shot left, right, and center. So that is a commitment that is beyond the province of investors. That's why we're having the problem. It's not an NNPC, you know, flicking the magic wand and saying that, look, tomorrow there's going to be gas. It's beyond that.
Well, I guess from here on, we just hope for the best, that our policymakers will continue to do the best that they can, and that sooner than later we'll see a more visible results and impact on the economy. I have been talking to Galtiman Liman. He's an energy expert and policy analyst, and we have been looking at Nigeria's gas industry, that supply, demand, and the sale of the product. That's what we've been looking at today. We'll take another quick break now, and we'll be right back. Welcome back to Business Morning. Let's quickly check with the financial market indicators for Wednesday. That's interbank rates climbed about 2% yesterday, closing at a 14% average on cash outflow. And today, Treasury bills worth over 80 billion naira will mature at the Treasury's market. And that should provide more liquidity for the market and perhaps have some impact on rates and bring them down. Now, for the secured open buyback window for banks and discount houses, rates it inched a little higher to around 13% on average. And at the currencies arm of the market, the naira rallied against the dollar at the interbank foreign exchange market, closing at 157 naira 39 kobo to the dollar. Now, let's quickly look at those bills that will be maturing today at the open market operations. Now, it's one of the monetary policy tools of the Central Bank of Nigeria. The CBN uses that to mop up excess liquidity from the system. It also helps banks to manage their excess cash. We had the 167-day money worth about 17.9 billion naira sold by the CBN at the rate of 16%, 163-day tenor worth about 31.2 billion naira, auctioned at 16.4%, and a 135-day tenure worth about 39 billion naira, given at the rate of 16%. All of this will mature today. That means more funds, more liquidity for the market. The Nigerian Stock Exchange resumed yesterday and rallied over 1% and still very firm at over 22,000 points. The market got a firm boost when First Bank, one of the banks listed on the bourse, released its first quarter 2012 earnings. Let's take a look at the numbers briefly. Gross earnings came in 42.5% higher at 92.2 billion naira. Profit before tax also surged significantly over 100% to 28.5 billion naira, while profit after tax came in also very much higher, over 100%, also at 24.5 billion naira. Net assets also went up over 2% at 363.6 billion naira. That, of course, increased the improved sentiment at the market. We saw the banking index, the best performer yesterday, rising over 4%. So major banks, Access, GTB, topping the gainers chart yesterday. The market is open for business today. The opening bell rang at exactly 9:30 a.m. and hopefully we will see green numbers when the closing bell rings. That's about all we can take on today's edition of Business Morning. Thank you so much for being a part of it. Channel's news track is at the top of the hour. I'm Esther Obodaga. Bye for now.